Good morning and happy Tuesday here at verifiedinvesting.com. My name is Gareth Soloway, and this is the game plan. All right, so we're going to get into the nitty gritty, the technical analysis, probability-based trading, which again, in my humble opinion, is the only way retail investors have a shot to make money consistently in this market. All right, when we're looking at the markets, we saw yesterday an early gap down. We saw the markets opening lower and then the repeat kind of coming in. Now, yesterday in the game plan, I guided you guys to assume that was the likely scenario. Why? First of the month money flow from retail investors. Everyone got paid on the 30th or 31st. They had money to deploy come the first of the month. In addition, you have contributions to 401ks, to retirement accounts. They then go in the market at the start of that month. So remember, if there's not a lot of volume in the market, meaning institutions aren't involved heavily, the first of the month tends to be a positive day for the markets. Yesterday, we opened lower. By the end of the day, the S&P was up about 0.5%. Now, a little of that can carry into the next trading day, but not much. But again, we still see this general retail excitement in the markets. Institutions, meaning hedge funds, are starting to get involved. But for the most part, this has been a retail-driven rally off the April 7th lows. Let's jump into the charts and take a look at what we have today. This is the S&P futures. So again, we can see the markets closed yesterday right up here. Overnight, we faded. And then this morning, starting around 4 in the morning right here, 4 a.m. Eastern time, we began to float back up. So again, the idea is you're starting to see people gaming this and saying, okay, if we're down in the overnight, buy that early, buy the futures early, because we'll float back up and continue higher throughout the day. Now, again, one day this won't happen. One day we will see a late day sell-off that kind of surprises everyone. But essentially, that's up to the market when institutions want to start dumping on retail, when that will happen, right? So again, the way I look at this is you assume it will be a float market until proven otherwise. And in that way, generally, you have the neutral to positive bias. I don't think there's a huge up day here. Again, we don't have the catalyst to cause a huge up day. But again, the general light volume float is likely to continue until something else happens to trigger the opposite. Now, just a little side note here. Remember what I've talked about with you guys before, that essentially we're at a point where the trade data and the trade kind of shock of threats or new trade, trade negatives, that is mostly getting kind of ignored. The taco trade, if you will, that Trump again learned about just last week, that acronym was in play. But ultimately, what we do know is that economics matter. And so what I'm watching for this week, and I said this last Friday, I said, listen, guys, for the most part, the markets are ignoring all these trade headlines, because as long as the economy doesn't slide negatively into a recession, to be honest, who cares about tariffs? I mean, that's the way the markets are looking at it. Who cares? Let them tariff 100, 200, 500%. If the economy still stays strong, it is what it is, right? The economy's strong. All right. Earnings are going to go up then. The consumer's still spending. Now, I'm obviously being a little facetious in that at some point it's going to have a detrimental effect. In fact, I think it already is. But for the market itself, for investors, until you see a crack in the job and labor market, in my opinion, the markets don't have a reason to go down. All right. But this is the kicker. Today, we get the JOLTS data out at 10 a.m. Eastern time. That's job openings. How many job openings are out there in the U.S.? That'll be the first little insight into how the job and labor market is. Tomorrow, we'll get ADP private sector jobs and Friday non-farm payrolls. So there are risks in the next few days because we will be getting very important labor data from the government or from the labor statistics board. All right. So Let's jump back to the daily chart here. We'll go over to the daily. Here you can see again, we're still right inside of this zone. This is a resistance zone on the S&P futures here. And again, I've said to you guys many days in a row now, at some point, if we close above this high line here, then we should go right up to double top all-time high. Now, do we go beyond that and keep rallying? I don't know yet, right? I have to wait and see how it goes. I did talk to you guys about how do you get the max amount of bulls on board. What do? You at least pierce the all-time high. That takes out a lot of stops that have been probably placed right there. Now, again, that all is contingent on us breaking this first line right here before we can assume that that could be the culprit. All right. So again, just kind of really watching this zone very, very closely. Do we start to roll over? Or do we break above right here, in which case it's a hop, skip, and a jump to those all-time highs? Next up on the QQQ, same kind of thing. We're into all this sideways consolidation, very close, only about 3% away from that all-time high on the QQQ. Same thing, we could be setting up for a push up that briefly breaks that high and then starts to come in once you get enough bulls on board to kind of pull the rug, if you will. Now, one chart I actually do like is this one here, guys. This is the Russell 2000, the IWM. I like this pattern formation. So I think if we see further upside in this market, I think small caps start to lead the rally. And what we can look very closely and see here is that we do have, and let me just bring up my my tool here, my parallel lines. We do have kind of this little bullish pattern developing right here on the IWM, the Russell. And you can see right here, you have a shoulder, head, and potentially a right shoulder. That again would be an inverse head and shoulder pattern. So keep a very close eye on the Russell, guys. If I had to choose one place to be in the market on the long side, I would choose the Russell right there. Now, what's interesting is, look at this. The Russell is actually pre-market is actually green on the day. Well, if we bring up the SPY is flat to slightly negative. So you can already see the strength building in the Russell. The Russell, again, appears to be the next kind of money flow spot. So that's going to be small caps. It's going to be regional banks. A lot of these stocks that maybe haven't run yet start to turn to the upside. I've been keeping my eye on a few of them, something like a beaten down Teladoc, which again, you can see this is your daily chart of Teladoc, hasn't even moved off these lows. This would be something that, again, there's no guarantees, but it might be something that runs or turns to the upside because it's just so beaten down. Now, again, is this going to help Rigetti? Is it going to help IonQ? It may. Those have already run quite substantially. I'm more looking for the small caps that have not run yet, the ones that are still beaten down, trading at their lows. All right, let's flip over to the U.S. dollar. The U.S. dollar broke a key trend line yesterday. It obviously has not confirmed the breakdown. Today, it's trying to recapture. So we're going to watch very closely here to see if it does close back above this line. If it does, then it resets the potential for a breakdown, and it must confirm, obviously, once it does that. If it closes back again above, it could float back up. But right now, I'm watching that dollar today very closely. The 10-year yield continues to be in this bigger wedge pattern. We can see the downsloping high pivot to high pivot, the upsloping lows to low to low. And again, overall, I think like I've said before, there's still a chance we have one more surge up on yields, but in my opinion, we're coming to the end of the stronger, higher yields. Eventually, I do think, again, we could even see this on the labor data in the coming couple days, but I eventually do think yields are going to come down very hard, very fast to 4% as the economy starts to show labor issues and labor weakness. This morning, we have Dollar General having a big move. Now, this is kind of an interesting one. So number one, the stock's having a great move. The number two question we all have to ask ourselves, is that a good thing? Is it a good thing that Dollar General is all of a sudden doing much, much better? Or is it because people are struggling more and more and having to trade down to Dollar General? We saw Walmart. Walmart had good earnings. We knew that over the last couple of years, people were trading down from like Target and some of the slightly higher end to Walmart. Now are people at Walmart starting to trade down to Dollar General, right? And that's something that we have to be aware of. Now, on a technical analysis basis, if we look at this, it's trading right up here at 107. On a swing trade basis, I love a swing trade short around 123.80, major gap fill. As a day trade today, I might be eyeing 115.40, this pivot low right here. So again, I'll keep that on my day trade list, but also a swing trade potential short up to at this 120, just shy of 124. Constellation Energy. This is one of the energy plays that does the nuclear small reactors. This stock having a big move today after signing a 20-year energy deal with Meta Platforms. So Meta, Facebook, or whatever we want to call it. These guys, again, they got a 20-year deal. So the stock is rallying, and it's really taking up the whole sector with it. Now, for me, look at this, guys. This is kind of interesting. Where is it currently trading? Right at double top all-time high. Now, I'm not gutsy enough to pull the trigger on a day trade right here because, in all fairness, it was a little bit above earlier. But what I am watching very closely is basically connecting these levels here. Okay, so we can see, again, if we extend this line out here, we have this high pivot goes to right here. And then it cuts through here, but then we had the gap back below, and then it reestablishes right here at the, basically this level for a short that I'll be watching is right around 366, 367, 368. So right around 366 to 368, right in that vicinity. If we were to push up there today, would I swing trade short it? I might, but I definitely will be looking for a day trade. And you might say, well, why a swing trade up at that level? Because it's so extended. If we look at this chart of Constellation Energy from the April lows, it has gone vertical with almost no pullbacks. If we get up to this level here, it's going to be up 127.5% in a straight line. That is a massive move. In my book, that looks like today could be a blow off top scenario where you could end up seeing institutional money starting to take some profits on that play up at that trend line. So again, I do keep it on my watch list for a swing on the short side. And again, a lot of people would say, oh, but that's so good news. Why do you look to short? And that's always when I look to short. I always want to short into the good news because that's how you get the max bulls on board. And once you get max bulls, then the sentiment is too bullish. And ultimately, there's just no more bulls to buy, right? I mean, once you get everyone involved, I mean, obviously simplifying it to some extent, but that's the way it works, right? You always see institutions selling into the max bullishness and then buying the max fear. Remember the old adage on Wall Street, buy when there's blood in the streets, right? When everyone else is super bearish, thinking the world is ending, that's when you buy. Look at COVID lows, March 2020. Look at 2009, the stock market, great financial collapse there. When we saw those lows, when people were freaking out, was it time to go short and panic and sell, or was it time to buy? Likewise, on the bullish side, a great example of the bullish side maximum would be in 2021, Bitcoin at 69,000, right? I mean, we had people all over calling for 150, 250, 300,000 by end of year, and it was November. So basically a month later, they were calling for like a double, triple. It was a ridiculous max bullishness. And then we saw it come down to 17,000 from 69,000. So again, we have to all change our minds, right? We have to adjust to a more logic-based technical approach versus getting caught up in the hype. Most people get caught up in the hype. They tend to chase. I always want to be the first one on the other side when I see max bullishness or max bearishness going the other way. All right, back to the charts we go. Flipping over to Bitcoin. Bitcoin fractionally lower. So again, we came into this support here. That was a beautiful reversal inside bar. And again, inside bars, by the way, for those of you that maybe don't understand that, essentially an inside bar pattern means you have a big green candle or a big down move, and then you have the following bars are all inside of that. It's essentially a variation of a bear flag, right? So again, big candle, and then inside this bar is inside of this bigger red. Therefore, it's an inside bar pattern. And that, again, would be bearish. It's like a bear flag forming, and you saw the reversal or the fall down here, came right into support here. Now, the one question I would just throw out to you guys is, could we be making a small shoulder pattern? It's too early to know that, but you would also say it's starting to make another inside bar pattern here. So again, is that starting to create that head and shoulders, which is a bearish formation for the next leg, maybe down to this 96,000 level here? So just something to keep an eye on on Bitcoin in the near term. Gold had a strong move yesterday, breaking above this up down sloping trend line. It did have a strong close, a small pullback today. So again, we are getting a small pullback here today on gold, but as long as it holds this trend line, I would remain bullish on this chart here. And again, I was bullish going into the breakout based on this kind of wedge pattern, a bull wedge going on. We held this support low. We broke out. Now, again, granted, you haven't confirmed yet, but we're still holding above it, which means confirmation can happen on any day. And ultimately, again, you'd have to favor the bullish side at this point. Silver had an amazing move yesterday, guys. Congrats if you were along silver from this bullish consolidation that I gave you guys on the breakout. Remember the breakout? This was a thing of beauty here. So you had your down sloping trend line, how it high to the high to the high, breaks out and then makes a bull flag, boom, to the upside. That's a classic technical analysis pattern. Now, silver, just like gold, is pulling back after such a massive move. But basically what I'm watching here is, do we close kind of in the upper ranges here? As long as we stay in the upper 50% of this big green candle, then to me, this would be the beginnings of maybe another bullish consolidation for another continuation move. So I remain bullish on silver here, guys. I did take profits on my call options on SLV yesterday with options, verified options members, smart money options members. We did bank about 55%, but I still like silver on the long side. And with commodity members, we're still long the SLV here, expecting further upside. It's just when you're up 55% in basically a week's time on options, it's hard to say, oh no, let me try to get a little more. And so far that was the right decision, as those options would probably be down, or they will be down just a little bit today. Next up, let's take a look at oil, seeing what oil's doing here. Oil yesterday had a little bit of an up move. Today it is pausing. I'm still in the camp that if we push up into this range here, I would still look for a shortable level, because it's such a powerful zone of resistance going back multiple years. But again, we're still not there, so it's just me sitting on the sidelines for the time being. And then natural gas today, guys, if we look at nat gas, let me bring up the nat gas chart that I like to use. Here we go. You can see that it had a great move yesterday, but really that great move just negated the previous 3 days, right? And it just shows you how volatile. I mean, yesterday natural gas was up 8%. But all in all, we just reversed the previous 3 days of downside action. And today we're coming right back in almost 3%. So again, that's the normal volatility. Again, there's nothing for me to do on this chart. One of the keys to a great investor and trader is knowing when to sit on the sidelines. And until something shows a great setup with a 75-80% probability based on technical analysis, I'm going to sit on the sidelines of that chart and then wait to pounce. And remember, folks, one of the greatest analogies is that us as traders and investors, you don't want to be the person that's running out there screaming, looking for every little thing, because you draw too much attention to yourself. What you want to do, if you want to get fed for dinner and provide for your family, you want to be the lion in the bush that is just crouching. You're crouching until that one opportunity walks by, that zebra walks by, and you wait until the perfect opportunity to pounce. And that's what a trader does, an investor does, a good investor. You have to be ready, but you have to be willing to sit there and be so disciplined, because if you jump out too early, guess what? You go without dinner, right? You know, the zebra, whatever it may be, the wildebeest, it gets away. And so you have to wait and be disciplined and wait to pounce to the opportune time. And that's how you're going to make a difference in your family's wealth. All right. It's ridiculous discipline, but trust me, that discipline will carry through a lot of other things in life. You get it down, you basically get financial freedom. All right. On that note, guys, I'm going to bid you farewell. I got to get to my trading room, the Apex Live Day Trading Room. Feel free to come check it out. We had a nice day yesterday with 3 for 3 winners. We'll try to do the same or even better today. Have a great one. Take care.